Hello and welcome back to another segment of Retirement Essentials. In today's short video, I want to share with you a recent Facebook Live that I did that's all about taking advantage of the COVID-19 economy with Roth conversions. I know 2020 is kind of a unique tax year for some tax planning. So I want to give you a little bit of insight into how to take advantage of the COVID-19 economy and tax rules and work in a Roth conversion into the mix. Here we go. All right, Facebook, welcome. Today I want to share with you the arguments for doing Roth conversions in the COVID-19 era. Now, I'm Devin Peterson, a retirement consultant and principal advisor here at Brighter Wealth Advisors and Brighter Wealth Academy. Now, what I want to share with you today is very important. All of you out there as retirees should equally be valuing the tax savings that you can be having inside of your portfolios just as much as the rebound or earnings inside of your investment portfolio. So my intention here in today's training is to help you really understand what's inside of the CARES Act and how that might support you in completing a Roth conversion for 2020. Does that sound fair enough? All right, well, let's dig right in. The first point that I want to make is vitally important for you as you move to and through retirement. And that is you need to understand where you're at. You need to understand what your tax story is. So let me share this with you. This is a tool that we've created at Brighter Wealth, which is called a tax story worksheet or tool. Now, inside of this tool, it helps you understand during your working years, your Social Security start years, and then your RMD years, which tax brackets you're in all those years. So for example, if you're still working, then this first column would be all of your working years, all of your income that's coming in and where it's coming from, and then at whatever age that you take your Social Security, obviously at that point, most likely your wages will stop, and your Social Security will start, and then your RMD starts at the age of 72. So it's really important to first understand your tax story, and then that really tells the story of should you or should you not do Roth conversions, particularly during 2020 because of the CARES Act. So let's kind of go there for a minute and let me explain. Understanding if you're going to be in a lower tax bracket when you retire or a higher tax bracket when you retire gives you permission or a green light to do those Roth conversions. Well, why is that the case? The reality is that you're going to pay taxes for your inside of your tax deferred accounts regardless, whether it's today, tomorrow, or you leave it to your children and they pay taxes. So balances inside of your IRA or your 401k plan, your TSP plan, 403b plan, all of those are pre-taxed and they're going to go through someone's tax bracket and be taxed. And so inside of your tax story, you can determine where you're at now. Are you in a lower bracket than you will be in the future? If you are, it makes sense to be taxed now, correct? Be taxed at a lower bracket than you would be in the future, right? Well, what if you're going to be taxed lower in the future? Would you do a Roth conversion now, knowing that you're going to be taxed lower in the future? No. There's a lot of that can be determined through that tax story worksheet. And then one additional thing to consider is if you're going to be in the same bracket, will tax rates go up in the future? Now, you can look up a few of my last Facebook Lives and a lot of content that I've written on this concept of taxes most likely going up in the future. But if you can really determine if you're in the same tax bracket and they're likely go up in the future for you, then that might be a great argument to do a Roth conversion sooner than later. Okay? So with that, the tax deadline, the current tax brackets that we have right now, actually expire on December 31st of 2025. And so we have a few more years at potentially lower tax brackets until they go up in the future. But that's for another conversation. Today we want to talk about, does it make sense to do a Roth conversion over any other year and why? So inside, the first argument that we want to make is inside of the CARES Act that was passed by Congress in March, they actually got rid of the required minimum distribution for all those that are over the age of 72. Now, let me backtrack a little bit. At the end of 2019, Congress actually adjusted the required minimum distribution rule or requirement, which was, it used to be at age 70 and a half. The year that you turned 70 and a half, you had to take a required distribution and force you to pay taxes on that amount. They changed that in December, and then once COVID broke out and in March, they changed that in the CARES Act to waive any requirement for that required distribution. Well, why is that important? Let me just kind of explain it this way. When the market is down like it is today, it's at a huge detriment for you or any retiree to sell positions inside of your investment account and lock in those losses by withdrawing them out of your account. So Congress said, okay, we don't want to negatively impact seniors as much as possible, so we're going to waive that requirement in 2020 and allow them to not take a distribution and not lock in any losses that occurred in portfolios across the board in our country. And so what that allows seniors to do is not take that withdrawal and wait till 2021 when hopefully the markets have rebounded back to a higher rate. So that's kind of the foundation for the RMD waiver inside of the CARES Act. Now, if we're talking about doing a Roth conversion, one might ask, well, isn't that selling a position inside of your account and moving it to another account? The answer is yes. But what we have to understand is if the market fell and you're forced to sell a position and withdraw it to cash, you're no longer in the market. However, if your account fell in 2020 and you sold a position inside of your IRA and did a Roth conversion inside a Roth IRA, so your IRA to Roth IRA, you're selling low and buying low. And so you're not really experiencing that permanent loss, because when the market rebounds, that balance inside of your Roth IRA will rebound with the market. And so that's why that's so important for you to understand. And so another thing to consider, another point of argument to support you doing a Roth conversion in 2020 is for all of you that are over 72 and you wanted to do a Roth conversion in the past, you would have to take out your full required minimum distribution first and pay taxes on that full amount, and then you could do a Roth conversion on top of that. But because of 2020's waiver on a Roth conversion or on an RMD, you can do a Roth conversion from the bottom of that withdrawal number. So it enables you to access more of your lower bracket and convert that into your Roth IRA. Now, those are a couple ways to capitalize on that. I did want to take a minute to explain again inside of, let's see if I can share my screen with you here. Inside of your IRA, as you move it into your Roth IRA, what that looks like inside of your account. And I've shared this with you before in a previous training, but it's so important, I want to be able to share it with you again. And that is your Roth conversion transfer options. You can see that in this first option right here, number one, you want to convert a $10,000 amount, as an example, into a Roth IRA. And so the first option is taxes paid from withholding. So you can convert that full $10,000, and in that transfer, you can withhold your taxes this is assuming you're in a 22% tax bracket. You can withhold those taxes, and then the remaining $7,800 amount is deposited into your Roth IRA account. Now, that Roth conversion has you taxed at $10,000, but only $7,800 gets into your Roth. The second option, which is a lot more efficient, is you take that $10,000 amount, you do not withhold taxes, you move that full $10,000 into the Roth IRA, and you're still taxed on $10,000. You would just need to come up with that additional $2,200 and pay it out of an additional savings. So again, both of them are suitable transfer options, but option number 2, where you pay your taxes from savings, is a lot more tax efficient because we're stuffing a lot more into your Roth IRA. And then from that point, it's a tax growth free option to grow your assets over time. Okay, so I hope that makes sense. I just wanted to create a little bit of a conversation around the benefit of doing Roth conversions during these uncertain times. Because I promise you, if you really understand your tax bracket through that tax story that I shared with you, you can really make powerful decisions inside of your retirement finances that are not only going to improve your tax situation today, but reduce the tax liability risk that you have and the exposure to increased taxes in the future, and also set up your accounts to have tax-free growth for the remainder of your lifetime. So very important for you to understand. And because that's so important, I want to invite you to join me at the end of the month on June 23rd. I'm doing a special live event. It's a tax essentials class that I'm going to be holding on June 23rd at either 12 noon Mountain Time or 6 p.m. Mountain Time. And I'm going to put a link to the registration inside of this Facebook post. But if you go to brighterwealthacademy.com/masterclass, it will lead you to this registration page where you can enter in your name and your email and join us inside of that free training. I promise you, it's so valuable that you understand where your tax story is and how you can improve upon that. This Facebook Live and that live training is all supporting this one-of-a-kind digital course that I created called a Retirement Taxation Masterclass, which it's a do-it-yourself version where you can show up, go through these trainings, really fill out the worksheets and understand these essentials for you to make improvements on your finances. And for the students that have already come through that Brighter Wealth Academy course, the changes that they've been able to make inside of their retirement finances is phenomenal. And it's in the hundreds, if not thousands of dollars of tax savings per year throughout their retirement. So powerful, and I'm glad that I was able to share this with you today. So without further ado, click on that link inside of this Facebook post, and hopefully we will see you in class. Thank you so much, everyone. Have a great day.